Mortgage rates just dropped, but don't get too excited because while the 30-year fix dipped to 6.63%, your monthly payment is still sky high, $2,802 on average. And here's the cold truth. Most folks still can't afford to buy a home in 2025. Let's break down why and what you can actually do about it. Look, I'm not here as some guru. I'm building up my money just like you, all right? But every week I study the financial game, credit, stocks, real estate, and business moves, and break it down for people like us. So let's talk housing. Mortgage rates dropped hard after a tariff announcement shook the markets, but homes are still damn near unaffordable. I'm not gonna lie, man. I couldn't imagine buying in this market. Like, I bought my home in 2021 and my interest rate was 3.2%. So I kind of lucked up. So let's talk about why the rates dropped and the fact that it really doesn't help much. Tariffs shook the stock market. Investors ran to bonds. Bond yields dropped and mortgage rates followed. And that's why we saw that 12 basis point dip. Sounds good on paper until you realize it barely makes a dent in monthly payments when home prices are still rising. All right. Now, record monthly payments are the real problem. Even with the rate dip, Redfin says the average buyer is now paying $2,802 a month, and that's a record. And that ain't including taxes, insurance, or hidden fees. Sale prices are up 3.4% year over year. So yeah, cheaper rates, but higher prices cancel that out. Who can actually afford to buy? Let's talk the numbers. To buy a $200,000 home, you need to be making over $61,487 per year. But 52 million American households don't even make that much. Now, imagine trying to buy a home priced at the national median, which is around $460,000. About 70% of U.S. households can't afford that. Now, it's more listings, but it's not where you need them. Inventory's up, 28% more active listings, 10% more new listings this March, but they're mostly high-priced homes. The affordable homes, still underbuilt, still unavailable, still out of reach. Now, should you wait or move now? Some sellers think we're at the top of the market and are listing now. Others are moving closer to cities, scared of job cuts. Buyers, they're hesitating. Pending sales dropped over 5%, especially in places like Miami, Jacksonville, and Virginia Beach. Now, the big question is, does this rate drop actually help you, or is it just a distraction from a broken system where the working class still gets priced out? Here's what I know. Rates might be easing, but don't let that fool you into buying what you can't afford. Use this time to stack, fix your credit, learn the game, and stay ready. The market's changing, but unless you're strategic, it'll leave you behind. If you're tired of being financially stuck and want real talk on money moves, subscribe to Millions Made. We're not pretending. We're learning and leveling up together. Now, tap in.